The same forces cooling the national housing market are putting pressure on the country's already tight rental sector, driving rent through the roof in many large cities and complicating the Bank of Canada's efforts to tame inflation, experts tell Global News. Figures released from the Canadian Real Estate Association, CREA, on Friday confirmed what many economists suspected and what market watchers have been saying for months. Rising interest rates are dragging the country's ownership market down. June home sales were down 24% year-over-year, CREA said, following a trend that has seen housing activity slow drastically since April. The spring's housing market has marked a drastic shift from the past 2 years of the COVID-19 pandemic, which saw a flurry of activity driven, in part, by rock-bottom interest rates. Bob Duggan, chief economist at the Canada Mortgage and Housing Corp. (CMHC), tells Global News the low rates helped lower the bar to homeownership and take pressure off the rental market as prospective buyers traded in their apartment leases for mortgages. When interest rates were still low, a lot of the demand was still funneling towards homeownership. And we've really seen that begin to change, Duggan says. Higher interest rates keeping Canadians in the rental market. The Bank of Canada's move to hike its policy rate by a full percentage point on Wednesday saw the benchmark interest rate in the country rise to 2.5%, up from just 0.25% at the start of the year. Higher rates from the central bank lead to higher mortgage payments and make it more difficult for some prospective buyers to qualify for loans. And as rising interest rates have coincided with a slowing in the property market, the rental market has meanwhile seen prices surge. The average rent for all Canadian properties was $1,885 monthly in June, according to rentals.ca, an increase of 9.5% annually. Prices are rising across the country, but rent appreciation is even higher in major urban centers. In Vancouver last month, rent for an average one-bedroom apartment clocked in at $2,418, up almost 20% year-over-year. The same type of unit in Toronto cost $2,192 a month, up roughly 18.5% from a year ago. Paul Dannison, content director at rentals.ca, says that with ownership increasingly out of reach for Canadians, the rental market is left to accommodate more and more people. Part of the cause is because as interest rates go up, people are less inclined to move out of the rental market and buy their first home, or they'll wait along the sidelines, he tells Global News. Pressure high on smaller, lower rent units. Higher interest rates are not the only fuel heating up the rental market. Dannison says that at the height of the pandemic, vacancies were relatively high in major urban centers as renters sought more space and moved farther afield. But at the start of this year, demand began to swing in the opposite direction. Now they're coming back. So the smaller properties, the 800-square-foot properties in some of the high-rises, the rents are starting to really rise on those. We've seen one-bedrooms go up quite a bit, Dannison says. Canadians moving back to the urban core are not the only source of demand, as a recent influx of immigration is putting more pressure on vacancy rates in big cities, Duggan says. With demand outweighing a limited supply in the rental market, he says his biggest area of concern is in the lower-priced units. Duggan says only a very small sliver of the rental market is affordable to the 20% of Canadians in the bottom quintile of income. As higher-earning households are priced out of the ownership market and hold onto their rental units, the supply of affordable units is increasingly choked off, pushing demand, and therefore rents, higher and higher. While affordability in the ownership market is mainly a pain point for higher-income households, Duggan worries that the surge in rent for low-income Canadians could push the housing system to its breaking point. Affordability in homeownership worries me a little less because homeownership is kind of like a choice. And if you can't afford homeownership, you can fall back on the rental market. If you can't afford the rental market, though, where do you turn? Dannison says that while there's no crystal ball for inflation or other economic forces, he would be surprised to see relief in Canada's tight rental market on the horizon. I think we're in for a little bit more pain. I don't see rental rates going down any time in the near future.